What's going on, everyone? Welcome back to another video. Happy New Year. Firstly, hope you had a good Christmas and festive break with your families. Markets are unfortunately closed today. However, in this video, I'm going to be covering my top themes to look out for starting Q1 2024. Also, a bit of a chat between me and you watching this video right now to not get too excited when starting the year out. So, without further ado, let's jump straight into the video. Starting the new year. This is a mistake I've seen a lot of traders do over the years, including myself. Starting the new year can often seem encouraging, right? Can often seem encouraging to go out there, run out the gates, risk more, overtrade. I've seen myself do it. I've seen myself get carried away in the first month of the year. Now, this is something that I remind myself at the start of every month, at the start of every week, and now, more importantly, at the start of the year. I had a chat with myself this morning before I'd done my live call with my traders in the mentorship, and I reminded them and myself the year is extremely long. The amount of opportunities that you are going to see and you are going to get throughout the whole year is absolutely mind-blowing. If throughout the year of 2023 you made no money, you were in a loss, think about the very single way that you can improve that in 2024. And that's not trading, right? That's not trading. By not placing a trade, yes, that may be contradicting to what all of us want to do. All of us want to trade to make profit, but just have a split second to think. Had you not traded in 2023, right, you would have been a break even. Being a break even happens to be most of people's dreams, right? A lot of people in the industry, we know a lot of people struggle in the market, or struggle to keep consistency, and that is because they overtrade. Right, they overtrade, they over-risk. Now think, to outperform 90% of those traders, all you have to do is trade less. So I'll say that again, starting the new year. If your main focus is simply to make money quick, make money fast, you're going to lose. You're going to fail. You're going to blow an account, blow a challenge. And guess what? In 3 or 4 weeks' time, you're 1 month into the new year and you've already blown your New Year's resolution. The fact that a new day on the calendar entices people to have this new sense of encouragement really needs to just stop. It needs to slow down. So between me and you, one trader to another, slow down. Relax, take your time. You have a whole year. You have a whole month to place a trade. Why rush? Right? Why rush? If you are chasing the market every single day, you are a degenerate. I'm joking. If you're chasing the market every single day, you need to think about what that's doing for your psychology. You are more than likely going to turn into an addict for how being in a trade makes you feel instead of actually chasing what your main focus is. And that's becoming a good trader. Becoming a good trader is everyone's vision, everyone's goal, but many people have different paths of getting there. So I'd like to remind you, the month, the week, the year are all extremely longer than you think. If you're rushing into the market, relax, take your time, and prioritize risk management. Know that keeping your risk tight is what keeps you in the game. You're not going to be here to have those 6 month winning streaks if you're constantly chasing the market. So keep that in mind. But folks, let's jump straight into some of my narratives. Something that I'm focusing on is the current regime that we're in. We have ongoing wars, both in Ukraine and Russia, and also in the Middle East. You have the ongoing war between Israel and Palestine in Gaza, and you also have the current escalation in the Red Sea. So the Houthis from Yemen have been firing and attacking boats in the Red Sea. Now, this is a form of retaliation against the fact that not many people are intervening against Israel right now for what they are doing against Palestine. So regardless of which side of the fence you're on, in terms of trading, you want to understand that the geopolitical risks have an effect on markets. Geopolitical risks often drive safe haven flows. So something I'm monitoring very, very closely whether we have an escalation on the matter, whether we have a de-escalation on the matter. I want to know that that's going to directly impact safe haven assets. We've already seen gold trading and closing the year well above 2050, so $2,050 an ounce on gold. Now, with that said, gold is near its all-time high, pretty much at an all-time high. I did print an all-time high a couple of weeks ago, so we want to try and keep that in mind. If there is further escalation or the current war that we're seeing, we may have that further drive to fresh highs again on gold. If there's de-escalation in the matter, expect gold to unwind. The second thing rattling my cage is the global slowdown that is happening and witnessing in front of our eyes right now. We have seen central banks across the world tightening interest rates more aggressively than they ever have in history. That all comes at a cost. That comes with a side order of fries, right? You want to keep that in mind. If you order a burger, you're going to get fries with it. Trust me to say that. But if you have central banks raising rates, right, tightening spending, that's going to come with a side order of slower growth. So we want to try and keep that in mind. We understand central banks are already diverging from the hawkish side, leaning more to the dovish side, already talking about rate cuts. The market already pricing in 4 rate cuts for the Fed this year. I almost said next, or I kind of said next year, but 2024. Markets are already pricing in 4 cuts for the Fed. If you want to know how I find this information out, go ahead to the CME, the Chicago Mercantile Exchange website, and search for the Fed Watch tool. There's quite a lot of information there that you can go ahead and use. And as markets reprice, so do they update their website. So it's a very, very cool free tool for you to use. Next is the Bank of Japan. The yen crosses happen to be some of the favorite pairs for me to trade, especially pound yen, dollar yen. Those happen to be my 2 favorite pairs to trade. But with that said, folks, I'm monitoring developments from the Bank of Japan very, very closely. There were talks about them coming out of negative territory on their interest rates a couple of weeks ago. However, that got pushed to the side and brushed under the rug because the Fed pause in rates and the market shift in expectations from the Fed done the work on dollar yen. Dollar yen currently trading at 141 at the time of shooting this video. It's already down 1,200 pips from the high, this most recent high that it's just printed. So with that said, we want to remind ourselves that the Bank of Japan, right, they were set to intervene. They were set to intervene in the value of their currency, but that got done with the market changing the expectations on the Fed. So is there going to be an opportunity for us to sell rallies in the yen pairs? I think so. So that is something that I'm focusing on very closely. So to summarize that, folks, we got gold, right? Gold and oil, given the current situation that we do have in both Ukraine, Russia, and Israel and Palestine. Thinking about that, understanding how escalation in geopolitical risk will drive commodities in safe havens in particular. Also considering the fact that central banks have raised interest rates more aggressively than they ever have in history. The ramifications of such high rates. Are we going to start to see that slowdown in global growth? The European economy is a big focus of mine. I have been focusing on the euro. Euro dollar obviously at elevated levels, which I'll cover in next week's video. Euro dollar at elevated levels with a weak dollar that we obviously saw over the past couple of weeks. Doesn't change, right? Nothing changes for me. And also the Bank of Japan, I'm monitoring developments from them very, very closely. And yeah, that's it, folks. But Happy New Year if you've watched till now. Thank you very much. I'm going to be bringing a couple of changes to the channel. I think what will be valuable, something that I would have loved to see, is strategy reviews. So love him or hate him, I'm going to be covering ICT. I'm going to have a section where I review strategies. I'm going to cover ICT, SMC, Wyckoff, whatever you want me to cover. Drop it down below, right? I'll also share some insight into how I trade. I'm going to try and provide as much value as I can. I feel my YouTube is something that I've lacked on. I am well into my journey in markets. I've been in markets for over 8 years. So I have a little bit that I can talk about, so I'm going to continue to do so on my YouTube channel. If it's helped one person, then that's already my job done. But folks, if you've watched till now, thank you so much. Do like this video, drop a comment below, share this with a friend, right? And yeah, have a great year. May this year be the year you're looking for. May you find everything you're chasing in markets. But please manage your risk, live to trade another day. But see you next week, Macro Monday. Have a good one. Bye-bye.